Hi there, it's Stacy Essner for Coffee Talk. Today I am going to be joined by Jett Miller of Jett Miller, or the Jett Lending Team. I am waiting for him to join. So, just waiting for him. So, we're going to find out a little bit more about what makes his company and his products different from other. Hi, Jett.
Hello, Stacy. How you doing?
Good. How are you?
Very, very good.
And where are you right now?
I'm in the desert. I'm down in the Southwest and enjoying the sun, but yeah, having a good time here in the heat. It's
Yeah.
already warm.
Yeah, nice and warm right now.
That's right.
All right. Very nice. So, I was trying to think back. How long ago did you and I meet?
We met in I think it was 2017 or 2018 is when we
Okay.
first met. Yeah,
Okay. I
and
just remember
I
you walked
was
me into an open
very
house when you were
Yeah,
looking
I
for,
was very green and I was looking for a place for myself, and we met at one of your listings.
right? Yeah. Well, yeah, it wasn't actually one of my listings. I was just hosting the open house,
Oh,
and we just started talking. And at that time, my uncle was considering moving out to Arizona, where you're also licensed
that's
as
right.
a
That's
as a
right.
lender. So that's how you and I really connected to potentially get my uncle qualified to buy a place out there.
That's right. Yep, that's exactly right.
Yep, and there the partnership started.
That's right. And it's been I would say surprisingly for 5 or 6 years, it's been extremely smooth sailing for the last 5 or 6 years together.
Right. Right. And so your company just uh, became part of a bigger company or a different company?
That's right. Yeah. So I was at Cherry Creek Mortgage for about 4 years, and Cherry Creek was just acquired by Guild Mortgage. So I didn't change companies. The company was acquired.
Okay.
So all of my team has stayed the same, and basically for us, it's been business as usual, with the exception of getting used to new systems and getting used to just kind of new back end protocols. But in terms of kind of what clients are used to seeing or the service they would get from us, all that's really stayed the same.
Okay. And so nothing has changed. I know some emails have changed. I still haven't yet
Yes,
put all of that.
email. That's right. Email addresses have changed. There are some guild specific kind of like incentive programs. There's also, I guess some access to additional programs like some energy efficiency Fannie Mae and Freddie Mac options that I've been pretty intrigued by. So some access to kind of additional loan programs, which only serves to benefit clients.
Okay.
But by and large, it's been very much kind of just a seamless transition
Okay.
for us.
So you said that you now have access to some different programs that you
Yeah.
didn't have at Cherry Creek.
hmm
Do you want to talk about, are they, because you're licensed in a lot of different states, are there
Yeah.
any specific to Illinois, specific to first-time home buyers, specific to any particular, or are they nationwide?
Yeah, there are quite a few. They're predominantly nationwide.
Okay.
Illinois specific options are really some of those the Illinois down payment assistance programs, which we
Right.
still have access to.
Right.
One of the ones that I think is most interesting is we have a 3-2-1 program, is what we call it. So it's for first-time home buyers.
Okay.
It is 3% down.
Uh-huh.
You get a 2,000, so three stands for 3% down. Two stands for $2,000 gift card to Home Depot,
Uh-huh.
and one stands for $1,000 in lender credit. So we provide $1,000 of lender credit at closing.
Okay. So it's not the standard like 3-2-1 that we're hearing about with the
No, it's not the standard kind of 3%, 2%, 1% buy down program. We do obviously all the 2-1 buy downs and the 1-0 buy downs and lender paid buy downs and seller credit ones.
yeah.
All of those are options. All of those buy down programs I really view as it is a like as consumers, because I'm also a home buyer, for example. They're all basically bets on kind of where you think interest rates are going to go. So
Right.
if you have a hunch or a feeling that interest rates are going to decline,
Right.
then the buy down programs make a lot of sense, because you're going to end up refinancing those down the road.
Right.
If you don't know, or if you don't believe that rates are going to go down, then using those funds to really kind of buy down on a permanent basis starts making a lot of sense. So a lot of times people say, well, what's the right answer? And I say, well, if I know what's going to happen with interest rates in the future, then there is a right answer.
Right.
But if we don't know, then we're just making, kind of playing the odds, so to speak. And then the other X factor is we don't know how long someone's going to be in a house, right?
Right.
So if you've told me I know I'm going to be in this house for 5 years and I know what interest rates are going to do, then there is a right answer. But other than that, we kind of have to kind of play the odds and determine kind of what the buyer's most comfortable with.
Correct. So given, right. I mean, and obviously the interest rates, they've gone up a little, they've gone down, they've gone up, they've gone down. They're hovering right around that 6% right now, give or take.
Sure.
A few points above, a few points below,
Sure.
whatever, right? So are you seeing that people are still applying for mortgages?
Yeah. Some of that is always going to be regional based, right?
Yeah.
So, but I am, in the Southwest. I'm in Illinois a lot, and then I do some in California, Florida, etc. So I find that there's different kind of parts of the country that gets busy at different times. But I also have colleagues kind of throughout the country as well. And I would say that starting in March and on into this month, it really is the busiest it's been in about 6 or 7 months.
Okay.
By no means am I indicating that we're as busy as we were 2 years ago.
Correct.
But it was definitely a quiet 6 months. And I think that makes sense, right? I think it only means that buyers were logical, right? So when all of a sudden you have an unprecedented spike of interest rates to the tune of about 4%, which is over double what it had been, right? Um, Buyers need a minute to step back and say, okay, I was looking at a house worth, let's say $500,000, and my payment just went up, by 30-40%. I no longer can afford that house, right? But I do believe that we're seeing a lot of activity. I've got a lot of buyers that are now looking at houses.
Right.
So I think that some of that timing in terms of interest, like people are starting to gain comfort with what interest rates are at right now.
Yeah.
And kind of what those payments look like. But it was a little bit of a shock for a few months. And things are going well now.
So another realtor up in Libertyville said buyers are out looking. And I know Robert Refkin in the last week was on CNBC, and he made a comment saying that, buyers are accepting as 6% as the new normal. And I don't know if I quoted that absolutely correctly, but that while we saw 2.5% interest rates late 2020 or early 2021, we're accepting it, and people are just dealing with it.
Sure. Yeah, and I think that you're seeing, like, I think that Mortgage News Daily is kind of a good, just if you're a general consumer and you want to have an idea of where interest rates are, you're not looking to put an application in, you're not trying to get all your specific scenario written up. I think going to Mortgage News Daily just gives you an idea of where rates are at. I think right now they're showing that conventional rates are around 6.5%. One of the things that you're seeing as well, though, is that banks are kind of making this bet, or they're placing their bets, so to speak, that they think interest rates are going to be coming down too. Because while 6.5% might be a par rate, it is much more cost effective than in years past to buy those rates down. So before it may have been, you know, zero point 0.3, zero point 0.4 points just to lower your rate an eighth of a percent. Right now, for that same 0.3, 0.4 points, you might be lowering it 3/8 of a percent, right? And the reason they're doing that is that they know if they have you at higher rates, well, yeah, that's good for the bank to collect on higher rates. But if you're going to be refinancing very quickly, then they're not really retaining that loan for a long period of time.
Right.
So that it is cost effective right now to be looking at buying points. So, you know, Stacy, I know you know some of my methodology. I had never been really suggesting people to buy points a couple of years ago, whereas now they're quote unquote on sale to the point where sometimes it just makes a lot of sense to be buying those and to be lowering your rate.
So typically, you know, to buy the points, like what is that going to cost a buyer? And is it related to how much the purchase price is? I mean, is it the same thing as like PMI, where the purchase price is related to the interest rate? Like, how does all of that work when someone's trying to figure out how much they're going to need for their closing costs?
Yeah, so it is going to be based on the loan amount, right? So if so before it used to be about 0.3 points to lower your rate an eighth of a percent, which means in kind of common language, it means that it's going to cost you 0.3% of your loan amount in cost. So if you have
Okay.
in other words, if you have a $100,000 loan, it's going to cost you $300 to lower your rate by an eighth of a percent. That's how
Okay.
it used to be.
Okay.
And right now we're seeing things for as low as like zero point 0.1, so zero point 0.1 points. And so things are about a third, as expensive or about a half as expensive to lower your rate. So there are, significant benefits at this point to be lowering your rate. Especially what ends up happening is that banks like certain rates. So like right now, you might have certain banks that are saying we want loans at 6.125. So if your par rate is 6.5, it might be really cheap to get down to 6.125 because there's a bank that really has a big appetite to get loans at that rate. And so working with a lender that's looking up and down that rate sheet and kind of walking you through what your options are is really important. More important than it's ever been.
So, okay. So can you so if you're me as a consumer, I'm looking to buy down my rates,
Yeah.
and I'm looking at, and I'm going to buy down, my rate is 6.5%, and I want to buy it down to 6.25, right? As opposed to the 2-1 buy down. Can you just explain the difference for people just so they can understand what that means, um, and
Sure.
how that impacts my closing costs or my cost of the loan overall?
Yeah. So you're at 6.5%, and you say, "Hey, I'd like to go down to 6.25." Right.
Correct. Yes.
So that's it's a quarter point or 2/8,
Correct.
right? So it's kind of two turns and two buy downs, right? And if each one is going to be somewhere between 0.1 points and 0.3 points, for example,
Yeah.
we might say on average that might be 0.2. So it's going to cost you about zero point 0.4 points to lower that rate.
Okay.
Okay. It might be less. It might be a little bit more. Right now, it probably is less because they're kind of on sale. So I would be thinking about a third of a percent. So let's say you're again doing a $100,000 loan just
Right.
to make the math easy.
Right.
You're going to be paying around 330, 350 or so dollars in order to lower that rate from 6.5 to 6.25%.
And that's for the life of the loan, or
That's
until
a
I
permanent,
refinance it,
exactly. That's a permanent buy down. You've permanently bought the rate down to that amount.
as
That's right.
opposed to the 2-1 buy down, which is just for the first 2 years of the loan.
That's right. The 2-1 buy down is going to cost about 2.25% of the loan. So in that scenario, on the $100,000 loan,
Yeah.
it's going to cost about $2,250. Okay.
Okay. And in today's market, with there being such little inventory, we most buyers cannot ask the sellers to do that 2-1 buy down.
Right.
So can I, as a buyer, apply that $2,225 to the cost of my loan in order to get that 2-1 buy down?
So we have a lender paid 1%. So for 1% for 1 year, we can do that, right?
Right.
It doesn't, the reason there's no like buyer paid buy down program
Yeah.
is that essentially you're just prepaying that same amount. Like it
Got
doesn't
it.
provide any benefit to the buyer.
Uh-huh.
So although it seems that way, that $2,225, we're using that as kind of the ballpark here. That is the difference between what your payments would be with the 2% discount and the 1% discount. So you're basically just saying, I want to prepay some of my mortgage payments. And generally speaking, that there's no benefit to that for the borrower. It's really a program designed to have the seller help a buyer kind of step into their house payment.
Okay. I just want people to I just want people to understand the difference between the
Sure,
two.
sure. Okay, so let's just make the example, just to make math easy, that you
Mhm.
have $1,000 mortgage payment on a permanent basis.
Right.
If you had a 2% discount, let's say it was an $800 payment, so you saved $200, right?
Hmm.
For the year, that's 12 months of $200. That's for the year, that's $2,400,
Correct.
right? And then in the second year, you have a 1% discount. Let's say it's $900 is your payment. And so now you have a $1,200 benefit for that. So over the course of those 2 years, you've saved $3,600 by having this 2-1 buy
Right.
down. The cost of the buy down program is $3,600. It's
Got it.
exactly equal to the difference in those payments.
Mhm.
And so to have the buyer prepaying that
It
quote
doesn't make
perceived
any
benefit
sense.
just doesn't make sense for them because they're just prepaying the difference in their mortgage payment.
Got it. But if there's still a home sitting on the market, they've done reductions because there are some areas where that's happening.
Absolutely.
Then
Absolutely.
you ask to do that, maybe still leave the purchase price the same. You just ask for the 2-1 buy down or
That's right. That's right. Again, using that same example of $3,600, if it's and I'm using $100,000 house just to make the math simple.
correct.
If you're going to buy the $100,000 house and you could negotiate it down to what 96,400, instead of negotiating it to 96,400, you buy it for 100,000, but you have them contribute that $3,600 cost. It's the same for the seller, but the buyer has this inherent benefit over the first 2 years.
Right.
One of the things that
Right.
I really like about the buy down, the temporary buy down program, is that if, for example, after year one, in the example that we used, where you have $2,400 of benefit the first year and $1,200 of benefit the second year, one of the things that I love about that is if you do refinance after 1 year, that $1,200 that you still haven't received that benefit yet, it's your money. So you use that $1,200 to pay for your refinance or it buys down the principal of your house. You haven't lost that money; it's still yours.
Hmm.
And that's one of the difference. If you do a permanent buy down, like in the case where you and I talked about 6.5 to 6.25,
Right.
that's a sunk cost. That was purchased. You bought a quote unquote a better mortgage or a lower rate mortgage. I should say better, but a lower rate mortgage, and you bought that with with an inherent cost.
Got it. Okay. Let me ask you another question. There's a program that some lenders are doing, and I just want to know if your company does this also, or you have the ability to do it. Um, it's a new program where there's a couple of lenders that are able to do not just the fully underwritten, but the fully approved in a day.
In a day.
Have you heard of that?
I have not, but it's my understanding that if you do the underwriting, so okay, so if you get fully approved, that means that you're through underwriting, right? And so we could get through underwriting, but if if you don't have a property address, you wouldn't be clear to close. So you still need to go through underwriting with the property.
Okay, so but it's like so you're essentially a cash offer.
so
That's
that you're essentially a cash.
that's how I understood it. So I don't know.
Yes, we can, if we approve the loan,
Hmm.
you can do what's called a cash offer,
Okay.
or remove the mortgage contingency.
Okay. So, all right. So you can remove a mortgage contingency.
That's right.
Okay.
So if we get you through on it now, if it's just a pre-qualification, that's not the case.
Correct.
But if you do the full mortgage application and we go through the underwriting process, we'll stand behind the approval,
Okay.
right? And say that you can remove the mortgage contingency. And if you don't close in the 30 days, then we pay cash for the house. We save your, quote unquote, save your earnest money deposit. And then we continue to work together to get that mortgage closed in your name.
So explain what that means when you're removing the mortgage contingency, because
Yeah.
that's the appraisal, right? Or is that
So that's basically just a cash offer.
okay?
When you make a cash offer, you're just waiving the mortgage. You're saying like this is not contingent upon me getting financing.
Okay. Okay. So not financing, but it's still the property still needs to appraise?
The property still needs to appraise,
Okay.
yes. And obviously the buyer's still going to do their home inspection and make
Of
sure that it's a house that they
course.
want to
Right,
buy.
right, right.
But yes, as long as the home appraises, right, we're willing to move forward and to pay cash for the house.
Okay.
Now,
So
I
so
can
if a
tell you,
buyer so
yeah,
if
I
a
was going to say that
buyer
I've
does
done
the
that.
appraisal waiver, signs the or the appraisal gap
Sure,
and all of
exactly.
that, then
That's right.
then
I can tell you that we've done that I've done this
uh-huh.
about a dozen times in the last several months, and that we've never had to pay cash for the house. So
Okay.
the reality is that if we get you pre-approved and you've already gone through underwriting, if I've got 30 days, I have yet to run into a situation where we're not able to close on the house.
Got it. And what
Obviously, you and I have worked together on several where it's much shorter than 30 days. So
I was
30
gonna
days gives us quite a bit of
right.
a buffer.
We've done I think 21.
Yeah.
Yeah. Maybe even 18. I think that was the quickest one we got closed. So, what's the quickest you've gotten a house closed? That wasn't that, yeah,
Yeah.
the quick.
Yeah. We did one. Now this is when they're already approved,
Hmm.
and we had an appraisal waiver. So they were putting 20% down. There was an appraisal waiver,
Okay,
and we closed in 11 days from the time they signed the contract.
got it.
So I did a jumbo loan in 17 days. That included an appraisal.
Okay,
I can tell you, and for for any borrowers that you end up talking to, um, I would not say that was the most
that was a little
peaceful
stressful.
11 days, right? You don't have a whole lot of time built in, but sometimes you come in at the last minute and you're there trying to save the deal essentially.
Well, I've worked with you where you have tried.
Yes.
You've tried really hard, and
Well,
we've had
honestly,
deal.
I think that I always tell people that, I like puzzles. And the reason I like doing what I'm doing is because every single person, even if you think it's going to be straightforward, everybody's got their own unique curveballs and unique things that you kind of have to get by. And so it's just putting a puzzle together and making sure that the financing is right for them.
But think of all of the new products I have helped get you introduced to because of some of the craziness
That's right.
that I have gotten you involved in.
That's right. That's right. Yeah, one of the new ones that I'm working on right now is it's basically an energy
Yeah.
efficiency loan. And so there's a couple different iterations. There's one that's kind of it's very simple. It's called the Green Choice Program. And basically it's for somebody who walks into the house and says, I know immediately I need to update the appliances,
Okay.
right? And so as long as the appliances are, are energy rated,
Uh-huh.
which just about any of the appliances that you go to Home Depot and find, for example, are going to be, high energy efficiency.
Okay.
You can build that in. You can build like a Nest thermostat in as
Oh,
well.
really?
So yeah, and that all rolls into the principal of the house.
So all I have to do, oh, so not if I gift them a Nest thermostat if they buy one?
Right. So like if you're buying, again, we're going to use $100,000 house,
Yeah.
right? You can spend up to $10,000, which is 10%. So 10% over the purchase price you can spend on energy efficiency appliances and build that into the principal of the loan. So let's say you don't need $10,000 of appliances, but you wanted $5,000 of
Right.
appliances on a $100,000 home.
Yeah.
Once we see the receipts, we validate that, then the home purchase is not 100,000, it's 105,000.
Oh, nice.
Yeah.
Awesome.
Yeah.
I mean, that's great because I mean, so many people know that they're gonna update appliances right
Right.
away.
And so if they can build that in with their, basically they only have to pay, let's call it, 3% on their appliances,
Uh-huh.
right? Because they're putting 3% down,
Right.
and that appliance is now, amortized over the next 30 years. That's better than any of the financing options they're going to see when they go, they go to Home Depot, they go to Lowe's, or they go somewhere to buy their appliances.
Oh, that's awesome. That's
Yeah.
amazing. Huh.
The other one, it's a little bit more applicable in the Southwest, is a little bit more of a full-fledged program where they can actually build in the cost of solar panels and things like that as well.
We're seeing a lot more solar panels here
That's
in the
great.
Midwest.
That's great.
I
Yeah.
mean, you drive around my mom's neighborhood,
Yeah.
and on the little duplexes, they're all over the roof. It's kind of funny.
Yeah. That's great. And I think that like when it's sun, I'm not an expert in solar technology, but I'm pretty sure even when the sun, like even on a cloudy day, it's still generating
Yes,
power for you.
it is.
Right. So the solar panels are definitely a good way to go. And I like the fact that generally what happens if you already own, like for example, if your mom already owns her house, if your mom decides she's going to put solar panels on the house so that she can match all of her neighbors, it sounds like, um, then they're going to generally come out. Unless she's paying cash for the solar panels, then there's a UTC lien on the house. It becomes a little bit of a just more of a paperwork hassle, right? And I'm only familiar with some of the dealers that we work with on the solar side. But right now, a big chunk of that cost, if you were to go do that, is the commissions that are paid out to some of the salespeople.
Uh-huh.
If you go through this program, those broker fees are eliminated, and so you're saving quite a bit on the solar, and you own it, right? So it's like built into the cost of the house. You own it without a separate lien, and the value of the house is that much more. Most of the brokers I'm working with are doing a $10,000 third-party credit,
Uh-huh.
so they're buying your rate down such that your payment is the same, and you own the solar panels in the house.
Huh. So it's really interesting because I know when people have solar panels here, a lot of times they're rented or there's a maybe not rented, they're
Leased.
leased,
Yeah.
and the lease transfers to the new buyers.
Right.
So
Right. Well, I
that's
mean,
something
and I guess
else.
I would kick that back to you as to like how messy that is during a
I don't
transaction.
know. I haven't been involved in a transaction with
It,
solar panels,
I,
but
so I have done that quite a bit. You have to end up releasing the UTC lien. So like, let's say you were to have a lease on it, or you have a long-term agreement for your solar panels. They actually have to approve the transfer of ownership as well. So
but
it's, go ahead.
but in Illinois, I'm sure it's like any other lien on the property, right? It just has to be paid out, maybe? I don't know. That's something, I mean, we have a whole, through Chicago Association of Realtors, there's a whole push for a lot of it.
Right.
So that's something I can
What
ask.
ends up happening is that the UT, so the lien, so like the
Uh-huh.
solar company,
Yeah.
actually has to approve the transfer of ownership.
Huh.
Yeah. So because it doesn't
Interesting.
get paid out, they don't get
Right.
made whole. The lien stays in place, and the buyer actually assumes that lease and has to continue to make those payments.
So the lien stays on the property, not
That's right.
against the owner.
That's right.
Huh. Fascinating.
Yeah.
Huh. My
And
husband.
honestly adds to some complexity, I think, in the process, right? But if it's owned, right? So like if you do this program, you actually buy it and it's owned, it's part of the mortgage. There is no second lien, there is no further approval. Whoever's buying the house buys it with the solar panels already included in the purchase.
Well, guess what, Jett? That's a question I can ask the attorney next week when I speak to him.
There you go.
Glad that I deal with attorneys, not like you out in the West.
That's right.
Okay.
Actually, I'm licensed in 15 states, and Illinois is the only one that uses attorneys.
Well, thank God we do,
Yeah.
because I have to tell you, some of the stuff that you guys deal with, it's so interesting talking to realtors all over the country.
Yes.
I am so glad that I have an attorney, and such a great one that I work with all the time.
Absolutely.
So, yeah.
No, and I think that it does prevent, problem. And also, outside of Illinois, they do lean on the title company quite a bit more, right?
Absolutely. And,
Yeah.
and we have, there's a great title company that our attorney works with.
Yeah.
And I can always go to them if I have any questions. But
Right.
I just think that there's so many things that I would not be sure about. I mean, obviously, if we didn't have attorneys, I would I would have figured it out years
Right.
ago.
Right.
But I'm just really glad that I can lean on my attorney, no pun intended,
Yeah.
if I have any questions about anything, and I can always reach out to him.
Yeah.
So, but I have kept you longer than I wanted to. This was a wealth of information.
Yeah.
So,
Thank you for having me. I appreciate you inviting. We should do it more often.
yeah, no, definitely. So, I'm looking forward to you coming to Chicago in the next month.
Yeah.
So, if you are here, I know you're not the biggest Cub fan, but if you're here when the Cubs are in town, we'll have to catch a game.
Yeah, I would love to.
So, but I am definitely looking forward to seeing you.
That's right.
And if anyone is interested in finding out more about Jett and what he has to offer, check out his website, the Jett Lending Team.
JettLendingTeam.com. Yeah, that's right.
Yeah, sorry. I'm like getting tongue-tied. So,
Okay.
yeah, Laura, I'll have to connect you with Jett. He has a wealth of information. So, have a great day. Enjoy the weather out there.
Yeah.
It is trying to be spring here. It's not quite happening yet.
And
So,
you and I are at a charity event next month
yeah,
too, right?
are at a charity event for Esperanza Community Services.
That's great.
So,
I think
yes.
is it the 24th?
No, it's June 1st.
June 1st. Okay. I knew it was on a Thursday.
Yeah,
Okay.
June 1st.
Sure.
So, yeah, so we'll see you soon.
All right. Sounds good. Thank you so much, Stacy.
Have a great day.
All right.
Bye.
Bye.